Good afternoon. Welcome to another Wall Street Wednesday. Today is August 18th, 2021. This is episode number 58. So once again, welcome. Before I get started, I'm waiting for some people to join. Let me put my disclaimer out there once again. Always have my disclaimer. These are my thoughts, my ideas, my recommendations, my opinions. Please, if you decide that you want to follow up on any of these or do anything, make sure you consult with your financial advisor, your wealth manager, your broker. A lot of the ideas I'm putting up here are not for the novice investor or the beginner. So I just wanted to share that. That's my disclaimer. So like I said, I'll give a few minutes, wait for people to come on in. Boy, I'm here in Southern California and we're having our first taste of humidity. What's going on, Tony? So let me just give people a few minutes to join in. I know in the close, a lot of us are watching Robinhood for the earnings report, also NVIDIA. So I'll be keeping an eye on those too. Robinhood trade up ahead of earnings. I'm going to talk about Robinhood too because there's some interesting things on Robinhood's chart. I'm not a fan of Robinhood in terms of the investment, from the investment standpoint of trading. That's one of the things I'll talk about. I also talk about NVIDIA, so I'll talk about all those. So let me just give people a few more minutes to join, and then from there we'll get started. Whew. You can see the sweat on my brow, huh? It is a hot day here, and the AC is not turned down. It's all right. A little sweat never hurt anybody. In fact, after I get done with you guys, I have to leave a little early today because I have to go to rehab for my surgery I had. What's up, twin? What's going on, guys? Welcome, everybody. Welcome. You know what? While I'm waiting for people to join, let me go through the commodities, and then let me go through the cryptocurrencies. All right, commodity-wise. There are a number of commodities that are giving me either a buy or sell signal based on fundamentals, but the technicals are not there yet. So again, everything that I had recommended last week basically got stopped out of. Although the Brazil real is going down and continues to go down. So if you got short the Brazil real, stay short. The rest of I'll go into more next week because again, a number of them have commitment to trade reports that are showing that they're extreme levels in terms of being overbought or oversold, overbought or oversold. But what's going on right now is that the technicals are not there. So again, the dollar looks like it's a short up here, but it continues to run. The euro looks like it's short. And the euros look like they're a buy up here. Do I have that backwards? I don't even remember now. All right, so I'll talk about that next week. And my bottom line is I didn't see anything in the commodities that I wanted to trade or would recommend to trade. On the cryptocurrency side, it's become really, really interesting over the last 2-3 weeks, guys. So I'm looking at the chart right now. Let me put it up. I had it up. Of Bitcoin. Let's start with Bitcoin. Bear with me a second. Cryptos, Bitcoin. There you go. All right. Bitcoin closed at, right now it's at 44.8, just a hair under 45,000. That is at the bottom of a new trading range. So Bitcoin for the last, 2-3 weeks has been trading basically between 445, 448, where it is now, and 48,000. So it's between 44,000 and 48,000. That's what's been trading. Trading well. And again, if it breaks through the resistance at 48, your next stop is 53. If it breaks support on Bitcoin, your next stop is 41. So I'll give them all over again. Stocks in the trading range right now between 43 and 48,000. If you're going long here, look for a move up to 48,000. If it takes out the 48,000, your next stop is 53. If it does not hold support at 44 or 43,000, your next stop is 41. But overall, basically since July 24th, Bitcoin's been trading extremely well. All right, let's go on to Ethereum. Bear with me a second. Ethereum. Let's see, I want that one. Ethereum Same story almost as Bitcoin. It started its run on July 21st. All right, right now it's in the trading range between, between 2,900 and 3,300. Again, Ethereum's in the trading range between 2,900 and 3,300. You take out the 3,300, your next stop is 3,600. And after the 3,600, your next stop could be a new high. All right, because you'll be in that old trading range. To the downside, if it does not hold, your downside, if it breaks to 29,000, your next stop is 2,900. 2,900. Your next stop is 2,300. Hi, what's going on, sir? Richard, how are you, sir? All right. So again, Ethereum. Now, I'm going to skip over this one. Let me go to Ripple. Ripple. Bear with me a second. I'm pulling up the chart. That's the wrong chart. Ripple with the dollar. Oh. Bear with me a second. Come on. I pulled up the wrong chart. I pulled up the Ripple and the euro. I went to Ripple and the dollar. All right, Ripple. Ripple trading at 109. Looks like it closed today at 112. Our last trade was 112, so it's trading between 109 and $1.33. So trading between $1.09, $1.33. You take out that $1.33, your next stop is the upside is $1.65. Your downside, if it breaks the $1.09, your downside is 83 cents. Again, trading pretty well. And again, like the other ones, it started to run back in July and it's been running since. Let's see what else. Doji. D-O-G-E. Doge. Bear with me a second. Let me find the right one. I believe this is the right one. All right, Doge. And a trading range between 30 cents and 35 cents. In fact, today it closed right at support at 30 cents. So it's sitting right at support at 30 cents. If it does not hold the support at 30 cents, your next stop is 23 cents. If it does break to the upside and take out that 35 cents in that trading range, again, 30 to 35 cents is the trading range. You take out that 35 cents, your next stop is 38 cents. A lot of work in this one. It started its run 2 also back on July, same day, same time, July 21st. Problem is that there's a lot of work. The all-time high on this is basically 74 cents. So it's got a lot of work. All right. And then the last one I'm going to do is Cardona, excuse me. Sorry to call it Corona. Got beer on the mind. Nope, that's not the chart I wanted. Bear with me a second. I think that's the one. All right. I told you this when I first started talking about cryptos. I'm going to say it again. I think this one has some real job applications. I think it's going to trade extremely well. It's basically has traded up almost back to its all-time high. Right now it's trading at $2.07. The all-time high is $2.50. So you're right there. Trading range, $1.91 to $2.25 is your trading range. Again, $1.91 to $2.25. You take out that $2.25, your next stop is $2.46. You take out the $2.46, you have a new, and you're going to take out the challenge, the old high. If it does not hold $1.91, the downside is to $1.61. Bear with me a second again. I'm sweating profusely. And since I'm in here by myself, I can't holler at anyone to turn up the AC, so I'm going to have to keep wiping. I do apologize for that. All right, Ham, how are you? Sarge, how are you? All right. Those are the commodities. Those are the cryptocurrencies. All right, now, in my message I sent out today, I said to you guys that you can make a lot of money trading cold, repeat, cold IPOs. All right, so let me put up some charts here real quick. I can't put them all up, so I'm putting them up one at a time. I don't even know which one this is, but you know what? I'm not going to put them up. I sent them to you guys. HNST, Honest Group, which is, who is it? Jessica Abbott's company. ONTF, Oscar, Krispy Kreme, Consent, the challenge you have with all these are all IPOs that from the time that they were priced, opened up and traded below the IPO pricing. If you look at the charts I put up there, I already sent out, every one of them is trading at their all-time high. Why do I bring this up? God, I'm sweating profusely, guys. I do apologize. I guess I'm going to keep the glass off for a while, too. The reason why, put them back on, I can't see a thing. The way I'm sweating, I'm probably going to have to end this early. So I do apologize, guys. I should have turned the AC down. All right. What happens is, and you got to understand the procedures for IPOs. These companies, they go out and they do what's called the roadshow, dog and pony show. They travel the country talking about how great their company is. They meet with all the top portfolio managers, hedge fund managers, bank. They meet with all of them and they tell them their story. They tell them how good things are. They tell them all the prospects and why they should own the company. The other thing that they do too is the investment bankers will typically always price IPOs in the hole. They want that first trade to be profitable because if it's not profitable, we're going to have a problem. So with that said, I'll check it out too. I'm writing it down. CPNG. I'll check it out. All right. Bear with me a second again. So they're going around Wall Street. They're telling everyone how great the company is. They're drumming up all the hype. All right, they're on all the TV shows. You hear them talk about such and such is coming public. This is Jessica Abaca's company. She's done a great job. She's done this. She's done that. And by the way, I'm not picking on Jessica Abaca. I'm just telling you how they do this. Then the stock starts trading. They price it, and it opens up and starts trading below the IPO price. That tells you a couple things. One, institutions have no interest. Two, this thing probably was mispriced. Probably should have been priced even cheaper in the hole. Three, if there's no interest in this thing, the only ones that are really holding it up are the investment bankers. The investment bankers are only going to hold this thing for maybe 1 or 2 days. Technically, by law, they're supposed to support it for 30 days, but no one ever does. All right? And the reason why I gave you the weekly charts in these is to show you just how these things just drift and drift down. There's no interest in them whatsoever. All right? It's a simple strategy, and I'll say it again. When you find, especially IPOs that you've been hearing about and being touted, and everyone's telling you how good the company is, and you see them on the news, and they price it in the hole, and this thing trades below the IPO pricing. Simple. Get short. All right? It might take you 3 or 4 days to get short because you have to borrow stock certificates for those who don't understand that. Those who understand, great. And also what you'll find too is most of these, after a week or 2 weeks or 3 weeks, will have options that you can actually buy puts on it. If you decide to use the options on these, buy time. Time is your friend, all right? You're not trying to time this. You got to be patient with these shorts. It takes time. It's a slow, steady drift down. I can give you a number of other ones to take a look at. But again, when an IPO goes public and it does not open up, if it opens up below its syndicate price, real simple. Get short, use the IPO price or just above it as your buy loss, but get short. Think about it. All the good news is out. They sat down and had one-on-ones with everyone. They've talked, they've traveled the country. They've done Zooms, they've done individual meetings. They're telling the world how good their company is and what the prospects are going forward. Once they go public, there's a quiet period. There's nothing else they can talk about. Management and the company, the investment bankers cannot go out and talk about the company anymore. They can't talk about it for at least 30 days, in some cases more. So that's why you see this. All right, so take a look at those charts. They're just rough. Now, I had somebody ask me, I got a couple others I'm going to go over, but let me just do this first. I had somebody ask me about hold on a second, let me get to the stocks. CPNG. Don't know it. But again, I'm looking at the chart on it. You can see it. I don't know where I was priced at. You can see it the first day. I'm looking at the first day stock. First day data. Hold on a second. Let me give you the first day data. So when I do that. All right, first day of trading, CPNG. Opened up at 63, went to 69, closed at 49. Where's the stock today? Stock closed today at $32 a share. All right. I'm telling you guys, do your research, do your homework. But I'm telling you, you'll find these trades, they're nerve-wracking. The reason why they're nerve-wracking is because they're silent, they're slow and silent and deadly. No one's talking about them. No one's pushing them. And when they finally do break down, they start to break down. They break down. There seems to be no interest in them whatsoever. All right. So if somebody told me 60 billion market cap, South Korea, again, I don't know what they do. I'm just looking at the chart, and I'm just telling you, typical of IPO. And you'll see this a lot, I repeat, a lot, especially with the ADRs. All right, so just track them. If you don't believe me, just go through the list. I mean, I can pull up several from last week and show you ones that are breaking down already. All right, that's to the downside. Now to the upside. Several, I'm just looking now. So Robinhood reported earnings. Did they report? I don't know. You guys let me know. All right. The Amazon of South Korea. Okay, cool. And James, I'm not saying it's not the Amazon of South Korea. My goal always is to put money in your pocket. And the point of least resistance on this thing is to the downside. Just that simple. They might be the Amazon of South Korea, and I imagine over time, if they are, they'll work their way back up through that old high of $69 a share, and I'll take a strong look at it. Prior to 69, I got no interest. Now this brings up another stock, and I missed it. I got rid of Curse. I freaking missed it. For those who don't know, I had some surgery. I'm not back. Mentally, I'm fine. It's the body. I'm not back to 100% yet. I freaking missed it, and I've been watching it. I think I might have this chart. I'm gonna look for it. There it is. All right, you can see it. I know my big head's blocking part of it. Monday, MNDY. When this stock came public, I remember on the call with you guys, I said to you, I said, look, this thing came public. I'm going to wait for it to run and see what a high. And it finally hit a high back on June 18th at around $232 a share. That was my number. And then it finally broke strong 2 days ago, and it broke through that 230. It actually, the actual number that I had in my head was 255. And when it went through that number, I literally missed it. I missed it. And the next day I looked up and I said, well, this is a Milligan rule, and that is I won't pay more than 10% above the breakout price on the stock. Does not mean, repeat, I see Robinhood beat the market on revenue. It does not mean the stock's not going higher. Again, those who get into technical analysis will understand the Fibonacci's, and if this stock ran from 248, which it did, all the way up to 355, which almost is 100 points, I'm expecting at least a 50% retracement. I mean, that's just the nature of the beast. So that's the reason why I don't chase them on the 10% move. So I'm expecting a retracement, but I missed it. Again, symbol, MNDY. And somebody just put this up, and so I'll comment on it too. All right. So James, I mentioned that. I love that, James. James said I held. I believe James has it right. I got the symbol wrong. I do apologize. Thank you for catching. I caught that. Thank you. James had it right. I had it wrong. Thank you. James talked about how he's still long on global communications, globalcom.com. I'm long too, James. I'm long that one too. It trades it. For those who don't know, James is a former student of mine. And James with several of his classmates, I taught them this strategy. And they've been using it now. I guess, James, you've been using this now, what, 8, 9, 10 years, somewhere along that lines. And I think it's worked out for you. But that's what's going on. So I mentioned Monday. The other one we just mentioned was Global, GLBE, Global E Online. When you look at Global E Online, you might see some volatility. But here's what's interesting about Global E Online. And let me get out of this too. Bear with me a second. All right, what's interesting about Global E Online is there was a trading range between, looks like $50 and $64. Now there's a trading range between 64 and 76. And we're challenging those old highs again. I like that. Yeah, James said it works when it doesn't. Key is to cut short when it doesn't. No question. These things can go against you really fast. There's not a lot of support. There's not a lot of resistance. That's the reason why I like them. So when they do move, they can move very fast and very quickly. All right. So I mentioned that one. The other one, I've missed this one for the last year. I'm putting a weekly chart up on mine. I'm going to put it up for a second for you guys. I missed this stock for the last year. When it went through 100, I should have brought it then. I didn't. And now it's at 200. Let me put the chart up for you real quick. Symbol is classic stock. Stock went public back in 2020. Stock did a secondary in July 2020 at $74 a share, which is pretty much, it was a seasoned public offering and brought more IPO stock to the public at $74.25. That brought in some weakness and made a buying opportunity. And then from there, it took off. Now, the reason why I have this chart up here, if you look at it, that purple line, you're looking at a weekly chart. If I put it to a daily chart, it's more of a saucer than a cup. And what you're seeing here is what we call a saucer and a handle and then the breakout. This is an extremely bullish chart pattern. All right. So again, you're looking at Bill, and Bill is a back office software application for small and mid-sized companies, very similar to Paycheck. All right, that's what they do. They're going into that same market. So everything they do is cloud-based and so forth and so on. All right, but again, another IPO, and you can see it. Over the last, I got so much stuff up here, it's crazy. Since it went public, the stock went public, the cheapest you could have bought was at $35 a share. So here we are 2 years later, the stock's trading at 200 and shows no signs of slowing up. Now, while I've been speaking to you, Robinhood posted results. I don't know what the stock is doing. So bear with me a second. Let me see. James, INMD, I follow. JYNT is one I do not follow. I do not know that one. JYNT, I don't recognize that one. Oh, that's why. It went public a while back. Went public back in 2016, but it's trading extremely well, so don't get me wrong. I'm looking at a weekly chart too. All right. So now, bear with me a second. I just want to see the aftermarket trading. I want to see the aftermarket trading and Robinhood and so forth and all those. Bear with me a second, guys. I'm going to talk about Robinhood real quick. Just want to see the aftermarket trading. All right. Robinhood closed at $49.80. Since then, it's aftermarket trading down $2.82 at $46.98. Let me put up my Robinhood chart if I can find it. I thought I had it up here, and I guess this one's older. I posted this a couple of days ago. One of the things I mentioned about Robinhood was I said to you guys, I said, look, Robinhood has a gap. And I mentioned to you, I'm on a daily chart, that gap was between 40, Get my numbers right. Gap between $47 and $55. It came back and filled that gap. It tried to rally a bit today ahead of the number, and and you can see at the number it failed. I would expect, based upon they beat earnings, they beat numbers, but again, it's a very specialty company. It's not like they're going to be the next Goldman Sachs. I hate to say it this way. I don't know the company that well in terms of the financials and everything else, but looking at the chart, I'd probably be more comfortable being short than I would be being long. All right, it filled that gap. It literally came down to $46 and change, filled that gap, and then started to bounce off that. I expected to test that old low at $33 a share. I expected to test those. Same thing with Coinbase. And guys, I'm going to say this to you, and I said it before. Let me close this out. I'm going to say it to you, and I said it before. When this market starts to break down, when things aren't trading well, I recommend that you start looking at the IPO market. Look at IPOs that have currently gone public 6 months, a year ago, and look at them. You're going to be surprised how the bad ones are really bad. The majority of IPOs companies aren't around in 5 years. A small percentage is actually around in 5 years. Majority of IPOs don't make the turn. Either they don't make it publicly traded, they don't have the product, they don't have the service, but they don't make it. In some cases, it could be a money grab. They went public to make some money and then they left. Company's not doing well at all. And as you guys know, when you started looking at the IPO market, everyone kept telling you how risky it is. Now, most IPOs don't make money. All right. So if that's the case, stop trying to trade only the ones that make money and look at the ones that don't work. You can play them on the short side. All right. Let me see what else. Oh, VSVO, Victoria's Secrets. I'm sorry, VSVC. Why can't I find it? VSCO. All right. I don't know. I don't know how the earnings going to play, but this is another IPO that looks really well. It's trading extremely well. All right. It took out that first day trading high 56 and it's ran from there. It's ran again. It's ran ahead of the numbers. We're in a trading range right now between 68 and 76. And depending on how these numbers go, you'll probably see it run some more. All right. Let me add a little more color to the IPO market. When it comes to investment bankers, there are different tiers, different levels of investment banking. The best thing I can do is I can give you an analogy of sports. There's Major League Baseball. Then there's there's single A, double A, triple A, the farm system. All right. Same thing happens with investment bankers. No offense intended. Your major league is your Goldman Sachs, your Morgan Stanley, your Merrill Lynch, your JP Morgan Chase, Wells Fargo. I feel like I'm missing somebody. Barclays. Those are pretty much your major league players. Then behind them, you have Farm League. All right. They're good regional firms. They might specialize in some particular area. I'm thinking about Cowen. Cowen specializes in biotech. But you have Cowen. You have, I can't even think of some of the second tier. The reason why I can't think of the second tier is I don't trade second tier. My advice to you is that if you're going to trade, you trade the major league investment bankers. The second tiers can also work. They can go up quickly. They can go down quickly. Second tiers typically are smaller deals. The stocks typically trade maybe 100,000 shares, 200,000 shares. And if one thing that you guys have learned, which I'm about to say now, is that you and I can manipulate a stock that trades 100,000 shares a day. We can run that up ourselves. I'm not going to do it because that's what Reddit's having problems with and all those other things. But running up a stock that trades 100,000 shares a day is not a hard thing to do whatsoever. Or running it down. And I've seen guys do it. I've seen guys do it with major stocks. So running these up and down is not hard. And that's the one thing you got to be careful with the second and third tier investment bankers. Every now and then they'll run their IPOs that aren't doing well. They'll try and run them, squeeze them up or squeeze them down to squeeze some of the shorts or longs. But in general, they don't do well. Again, I mentioned that there's a whole bunch of statistics and stats I've studied on this and got on this. There's a professor down at the University of Florida, my old alma mater, professor down at the University of Florida, Dr. Ritter. I believe it's Ritter, R-I-T-T-E-R. I believe it's Ritter. Has a whole bunch of data and information on this. If you're into trading IPOs, even trying to trade IPOs in the secondary market, I strongly recommend you actually get that data and stare at it and look at it. He goes through it all. It's really, really informative. All right. I covered everything I wanted to cover today. I kind of figured this was going to be a short one because I do have a doc's appointment later on this afternoon I got to get out the door and get to. So what I'm going to do now is I'll take any questions on any subjects that you guys want to talk about. One thing I've been seeing in the paper or seeing on the news is they've been talking about the tapering and the rent interest rates. Let me explain a couple things to you. Tapering and changing interest rates are two distinctly different animals. Tapering is when they actually slow down or stop some of the programs they're doing to put cash into the system. So in other words, the Fed might stop buying securities. They might stop buying corporate bonds. They might stop buying ETFs. They'll slow down the cash they're putting into the system. They put cash into the system to stimulate the economy. The other tool the Fed has is to lower or raise interest rates. All right. The Fed's not going to raise interest rates yet. They'll slow down the tapering. They're not going to raise interest rates yet. So you have some time on that. But they are, but no question about it, interest rates will go up. Now, I'll have to, if anyone has an interest, just let me know. I am getting ready for a new semester, school year. In one of my classes, I have students write a essay. And one of the videos I chose today, chose for them to write an essay on is the inverted yield curve. I went and found a video. I always tell you guys in my lifetime, I also know that going back further, this video basically shows that every recession we've had in the last 50 years was preceded by an inverted yield curve. All right, and you guys know I pound the table on teaching you that. I pound the table on talking about it. And the reason why is because the inverted yield curve is like a yellow flashing light. It doesn't mean to stop right now. It doesn't mean to step on the gas and go. It just means you need to start being cautious. You need to start looking at adjusting your portfolio. You need to start looking at maybe adjusting the route you're taking because there's a problem ahead. All right. Look at the inverted yield curve as a yellow flag, and it will give you anywhere from 6 to 18 months lead time. Now, with that said, one other thing, the market sold off on the close. You guys know that I track, and I'm putting it up here right now. You guys know I track the VIX. And on the close, as the market sold off, the VIX penetrated the upper Bollinger Band. It's in the tails. We're at extreme levels. The only reason why I didn't buy anything today was I was preparing for this call. I saw what the VIX did. I started searching for something to buy. And believe it or not, I'm still in my positions from the last time the VIX broke out. So I was sitting here saying, should I add to it? Should I add to it? And then I just basically moved on. All right. So I didn't add to my positions, but I'm still long. I'm still long NASDAQ. I'm still long the Qs. I like the VIX here. The VIX just gave me a buy signal. Again, for those of you who understand and heard me talk about the VIX before, it gave a buy signal on the close. So now's the time to go long the market. I prefer, just so you know, when I say go long the market, that means you want to look to buy the S&P 500 to SPY. Or the one I typically prefer most times is the NASDAQ Qs. All right, that's what I'm doing. All right, I have brought you guys up to speed to where I'm at. And by the way, I haven't looked at NVIDIA yet, but Robinhood is continuing to sell off. Again. All right, NVDA. All right, I don't think the number's out yet. The stock's only traded, it's only changed 2 cents. I guess the earnings aren't out yet on that one. All right, I'm going to take a few questions if there's any. If you guys have any questions, fire away. Richard, I know we talked about the VIX before. Richard, we've dealt with this before, so the VIX is giving us a buy signal. I'm not going to tease Richard, but Richard, if you decide to put that trade on like you did when you were in class with me, if you decide to put that VIX trade on, remember, once it goes above the 10-day moving average on the S&P 500, your sell signal to close out your trade on the VIX is when the S&P 500 breaks its 10-day moving average. Let me say it again. I'm pulling up the SPY as we speak right now. SPY. Bear with me a second. I'm pulling up the 10-day moving average. Boom. All right. So 2 days ago, we broke the 10-day moving average. Now we're getting a buy signal from the VIX. For me, having done this for years, when the S&P is below the 10-day moving average, which it is now, and you go long the VIX, this is where you want to be. Now, when the market does go through the 10-day moving average, when the S&P does go trade above the 10-day moving average off of this buy today or tomorrow morning, here's the deal. You're going to hold it until the S&P 500 breaks below the 10-day moving average. If it happens tomorrow, you're out. If it happens a week from now, you're out. If it happens a month from now. The reason why I bring it up is some people tend to take profits too soon. I can't tell you how long this thing's going to run. It might run a week. It might run 10 days. But again, when it does run, be patient with it. And if you're not sure, just look at the S&P 500. Look at how long it takes between the moves between the 10-day moving average. All right. Any charts you guys want me to look at before I hop? I'm just looking here. I got a few minutes. I can still go through some stuff. If there's some charts you want me to look at. I think if you follow this cold IPO strategy, I think it's going to put some money in your pocket. In fact, I know it will. And we'll go into that in more detail. As Richard said, it makes more money often as not. I haven't tracked in years. I haven't tracked the success in this. I used to track it. And when I did track it, it was accurate about 75% of the time. So that's what you're looking at. 75% of the time, that VIX strategy worked. All right, really did. Tony, what is KL? Kellogg's? Kirkland. You asked me about Kirkland, I think. I'm going to switch to a weekly chart real quick, Tony. Kirkland weekly chart. Ooh. All right. I took the volatility out. Kirkland sitting right at near-term support at $38.75. That's the bottom of the trading range. That trading range was between 38 and 44. So you're sitting right there. If you take out if you carry to the top of this trading range of 44, there's another trading range between 44 and basically 50. So this thing has a lot of, I guess, since I'm looking at a weekly chart, by the way. Yeah, it's got a lot of work in it. And I'm now switching to a daily chart. Bear with me a second. And as I switch to a daily chart, somebody's Kirkland again. Switch to a daily chart. Yeah, you're at the bottom of a trading range. You're at the bottom of a trading range. If you can get through that bottom of the trading range, it should trade up to $40 a share. There's another trading range there. You get through that $40 range, you're going to hit some more traffic at 42. You get through the 42 range, there's more traffic right through 44. There's a number of steps to get back to where this thing was trading. I don't know the company. I'm not sure why you're buying it, but based on technical analysis, I would not buy this. There's a lot of work to try and get this thing back to where it was, which means it's going to require a lot of work and a lot of patience on Kirkland. All right, let's see what else. Anybody else? That was Kirkland. Any other chart you want me to look at? Again, I'm still along my EPAM. I'm just typing it up in as we speak. I'm still on my EPAM. The only reason I bring it up is the chart is just a monster. It's just every time I think, I do add to it. So I've added to the position and it just just doesn't want to seem to want to slow down. So I don't fight it. I just, point a path of least resistance. Raleigh. All right, I'm going to switch to a monthly chart real quick. Woo. I'm not sure what happened, but the stock was trading at $180 a share to $200 a share back in 2008. And then basically from 2009 until 2011, it just nothing but goes straight down, just straight down to a dollar two. Then over the last, basically since 2020, the stock has run from $26 a share to where it is now. So with all that said, I'm looking at a weekly now. All right. Sitting at the bottom of the trading range, $65 a share. Trading range, there's a trading range between 65 and 70, and then 70 to 77. You're sitting right down there. Let me switch it to a daily. Again, for you guys who don't do this, I highly recommend that you switch to a weekly chart, monthly, weekly, just to see what's going on. All right, you can see it clear as day. So a couple things this stock is doing. One, it's coming back and filling that gap. There's a gap between 61 and 67. It filled that gap. Near term, since the beginning of July, you have lower lows and lower highs. It's in a downward trend. Near term, it broke support at 65. It looks like it's trying to fight it, trying to hang around there, but support was at 65, 64 and change, 65, and it broke that. Not sure what to do with this. Not sure what to do with it whatsoever. Not sure. Volume's kind of light too. It's not a heavy volume stock. The only thing I can say on this twin is that on this particular stock, I would be cautious here. You're playing for a bounce. If you don't get that bounce, your next stop could easily be 55. I would say also the stock looks like it's somewhat of a market performer. So you might have some hope here. But it's going to take a minute to get back to that 75. It's going to take several weeks, couple months to get back to that 75, unless some major news announcement comes out about some product or service they're offering. But it's a financial stock. All right, anything else anybody want me to take a look at? Oh, I see it now, James. Yeah, your Cleveland Cliffs came down, tested at 24, which is support. Now it looks like it tried to take out that 26. Trading well. Stay with it. Yep, but yeah, it's trading well. The other one was Snap. I haven't looked at this stock in years. Again, I don't know what it is. They all have the same. It must be the text. They all have the same pattern, by the way. They all broke their near-term support, and then they came rally right back off that support, which means institutional investors looked at this and probably said, let's buy the dips. All right, so that's what you're looking at. Let's buy the dip. So you Snap, bottom of the trading range, trying to fight its way back. You got a huge gap between 63 and where it is now. I imagine that gap came across because of earnings. So I'm looking at earnings. I'd have to take a closer look at this to see if I think it's going to fill that gap. It looks like earnings were a little better than expected. They were a little better than expected. So it might not fill that gap, but there's a gap right there. If it does go, trading range between 70 and 80. Here's your trading range. All right. I don't see any more. As I said, I've got an appointment I got to rush out the door to, but I'm trying to get back in the swing of things. I really do appreciate you guys. Yeah, the gap's scary. Gap is scary. I'm not sure what to do with that gap. If the earnings are really there and they forecast that this is the way it's going to be going forward and that the earnings blew out the number and that this was not a one-time fluke, but things are going to be this way going forward, it might not fill that gap. But, and if you look, oops, that's not what I wanted to do. That's what I wanted to do. And if you look, it's had gaps in the past. There's another gap here back in October 2020 off earnings, and it never came back and filled that gap. So, I mean, you got a shot. It might not fill that gap. It might run. You know, my theory, James, which I think you feel the same way, is I'd be patient. And if I saw it start to attack that $80 number, you know, up there, upper 70s, $80, then I'd look to actually maybe go and start doing some work with it again. So it's a stock on my stock watch. I would watch it. And by the way, for those who don't know, you don't know, there's probably about 70 stocks on my stock watch. And I don't watch them all per se. I put alerts on them. And when they reach certain price levels, they alert me. Then I go look at the chart and make a decision on what I want to do with them. All right, guys, I'm out. I appreciate you so much. Again, if you found anything in here that you found helpful, let me know. If you found anything here that you want to trade, make sure you speak with your financial advisor, your wealth manager. Yeah, I had a few dunks when I was at University of Florida, just a few. Not anymore. Trust me, these legs, that rim looks like it's miles away now when I stand underneath and look, so it's not happening anymore. All right, guys, have a great day, and I will see you next week. And feel free to text me now. I'm trying to get back into the swing of things, so feel free to inbox me, DM me if you have any questions, any issues, anything you want me to talk about. And look forward to seeing you next week. Have a blessed one. Professor Milligan out.